Hello, everyone. Thank you for tuning in and finding interest in First Look's business opportunity. Today, I'm going to show you the products that we educate the market with and sell. Also, I'm going to show you how to become a successful partner with First Look Insurance Agency. Now, all the information contained in this presentation is intended for general education and informational use only. It's not intended for solicitation to buying or selling insurance products. First Look is an insurance marketing organization that provides a structure and competitive compensation plan. We are not the insurance company. We are not obligated to give tax or legal advice, but if you do choose to join the team, we have certified and licensed professionals to help you with any questions that you may have. And I'm going to give you a little breakdown on the executive summary. My name is Michael Scarfo. I am a partner and chief operation officer of the company. In the past, I have owned other companies and had CEO experience. I've had a lot of direct sales and leadership experience and marketing experience. I am the broker and one of the top agents in this company. Now, my business partner, Charles Wells, he is the chief financial officer of the company. He has a bachelor's degree in accounting and finance. He's a CFP and a certified captive manager. He is also a Series 65 license holder. Now, what is this business opportunity? Well, let me tell you, we're a regulated professional industry where you must qualify to be licensed. We do offer some of the best products. We have hands-on training, and we do have a simple step-to-step system to success. Now, they say if you can dream it, you can do it. Everybody has dreams. Some people want to go into business for themselves. Some people want to know that they're financially free and they don't have to worry about debt, don't have to worry if their car breaks down, don't have to worry about anything. They want to be financially free. Some people just want to travel the world. Some people want to utilize this opportunity as a stepping stone for an investment into their corporation. And at First Look, we offer the opportunity for every individual in all walks of life. And I'm going to really break this down to you. So, the American dream. What is the American dream? Since the dawn of time, we were told to go to high school, go to college, get good grades so we could get a good job. Now we get that good job, the situation is we're working for somebody else and we're building their dreams. We're set on that linear pay. We're set on an hourly or salary pay, and there's not much room to grow. Now, what if one day that good job just doesn't need you anymore? They find somebody else with your same skill sets that are willing to be paid a lot less. It's happened. I've seen it happen many times. So, with the deception of this American dream, why not take your future into your own hands? Go into business for yourself and build your own dreams. Now, what do? We educate the market on tax-free financial planning strategies and living benefits through insurance products and annuities. As insurance producers and financial advisors, we are amongst the highest paid professionals other than physicians or attorneys. We're definitely within the top 10, 15 highest paid professionals. We work with most of the major insurance companies. We specifically tailored and handpicked the companies that we're going to partner with and work directly with. We chose AIG. They're a very renowned company. They've been around for many, many years. We have Foresters Financial. I'm a big fan of Foresters Financial because they have wonderful membership benefits and scholarship programs for our children. Fidelity and Guarantee Life was specifically chosen as our flagship carrier because they have a great return on the cash accumulation that's built up within your insurance policy. Now, let's talk about our flagship product. Now, our flagship product is called an IUL, an Index Universal Life Policy. Now, what is that? It's a life insurance chassis with a cash value vehicle built into the chassis. Now, it offers you tax deferred income in later years of your life. It is very minimal risk. In a stock market downturn, your account will go on a 0% downside protection, meaning you will not lose money. But in a up market, you will gain a percentage. In this case, with Fidelity, we're gaining 14% earnings. And then we could structure the cash accumulation in this policy to pay you up to the age of 120 with tax-free income. Now let's talk about the death benefit side. On the death benefit side, we have 3 free added riders. We have a terminal illness rider. If you were to become terminally ill and only had 24 months left to live, the insurance company will accelerate you 100% of your death benefit while you're still alive. We have the chronic illness rider. If you were unable to perform 2 of the 6 activities of daily living, they will take 2% of that death benefit and pay you 2% every month till that death benefit is depleted. If you had a $500,000 death benefit, that's $10,000 a month. If you had $1 million death benefit, that's $20,000 a month. Now, both of these riders, they are active on your policy after 2 years from the policy being in force. One of my favorite ABR riders is a critical illness rider because many individuals fall into this category as they get older. They come down with a heart attack, stroke, cancer. You have to have a major organ transplant. You get ill with Lou Gehrig's disease or you become blind. This rider will kick in and pay you up to 90% of your death benefit while you're still alive, depending on the stage of your illness. Now, this rider is active after your policy's been in force for 30 days. So if your client becomes ill on day 31, they're going to have to go through the steps process with the doctors and insurance company, but the insurance company will pay them out their money. It can pay them up to a cap with Fidelity of $500,000. These living benefits are available in 3 ways. It's temporary life insurance or permanent life insurance. Everyone knows temporary life insurance, it's term. Term insurance is usually the old school insurance that you have to die to receive the money and pass it on to your beneficiaries. In this case, our term products are offering living benefits. Long-term policies can be very expensive. Short-term can be a very low cost. There is no cash value built up in temporary life insurance policies. Now, our permanent life insurance policies would be whole life or IUL. We push the IUL, the Index Universal Life product. They offer coverage up to the age of 120. You have a cash value accumulating within the policy based on the S&P 500. You get to participate in a proportion of the gains and keep your money safe in a market downturn like 2008. And then when you finally cash out that money, you have a tax-advantaged income. You never pay taxes on this money if you structure it properly. And then, of course, the living benefits are also a free added rider with no additional cost to the premium. Now, here's a scary statistic. Millions of Americans have survived heart attack, stroke, or cancer by the age of 65. But what's scary about this, they can't go back to work or they can't earn an income. the actual average age of one of these claims is 43. Most of these people will survive, and many of these people will go bankrupt. They're forced to pull out of their 401ks, pull out of their qualified plans, and they deplete those plans and can't go back to work. So make sure you have that accelerated living benefit rider attached inside of your life insurance policies. Now, if you do get sick, who's going to pay for all of this? You have a mortgage. If you have children, you have to pay for their college, doctor bills for yourself, your spouse, your children, car payments. Who's going to put food on the table? Who's going to put money into your retirement account? Now, we've been talking about this. What if I outlive my retirement? And it is very possible. Now, most of our retirement wealth is in banks, precious metals, real estate, or qualified plans like the IRA, the 401k, 403b, and etc. The scary thing is a large proportion of this money can be lost to risk, fees, and taxes. We never know when the stock market's going to have a downturn. There's many hidden fees within a lot of these qualified plans. So we don't know those fees, and it could really destroy your retirement. Now, I said stock market downturn. What if we had another 2008? And what if it was worse? What if you lost 50, 60% of your retirement that year? You finally retire and you pull money out of those accounts, and those qualified plans only last you 6 years, 8 years. You're older, but what if you're sick and you can't go back to work? Who's going to take care of you at that point? That's the big problem. Who can take care of us when we retire? Can the government help us? I really don't think so. There's $19 trillion deficit and rising. Can Social Security be enough? Well, you know what? There's 77 million baby boomers. It's very expensive. That's a lot of money coming out of the government's pocket. They're not going to be able to afford the younger generation. Now, qualified plans, we already talked about that. We could outlive our qualified plan. We don't know what the tax bracket's going to be in a future rate. It could be 60%, 70%, and those qualified plans aren't going to last us forever. Now, if you have children, can your children take care of you? Can they really afford mom and dad? No, they have a family of their own. They have a mortgage, their car payments, their children that they have to send to college. So bottom line is, will you be dependent or independent? Let's take your life into your own hands. Now, we have a solution for all these problems. Like I said, life insurance that you don't have to die to use, with cash accumulation built inside of the life insurance chassis, allowing you to utilize this in your retirement years. So, life insurance, retirement income, disability income, and accelerated living benefits. These accelerated living benefits can act as long-term care. If you were shopping for retirement, for life insurance, or any of these services, you'd have to go out and get 1, 2, 3, 4 individual different plans. Now, that can be expensive. You could put $100 a month in life insurance, $300 a month in retirement income, $100, $200 a month in disability. You could put $300, $400 a month into your long-term care plan. But all of this is all added in one single policy, your Index Universal Life policy. Now, I really want to break apart to you qualified plans versus the Index Universal Life policy. The contribution stage to your qualified plan, you get a tax deductible. Now, they're basically saying your accumulation years is temporarily. Tax deferred. Temporary is the key word. You don't collect fees at the beginning of the policy. You get a tax deductible every year, but that's allowing the government to say during your withdrawal phase, you're taxable at that future taxed rate. Not knowing what that future taxable rate will be. It could be anywhere from 30, 40, 50, maybe 80%. You're pass away and you transfer that money to your children will receive that tax bracket and have to pay the taxes on that. Now, with the Index Universal Life policy, we do not have a tax deductible. We do not want to put a tax deductible on our retirement savings. The accumulation phase is forever tax deferred, and when you finally withdraw your money, if structuring it properly, you can receive a tax-free benefit on your income within a life insurance policy. When you transfer that money to your children upon your death, it's a tax-free benefit. Your children will not owe taxes on this money. Now, the power of a zero tax bracket. We pay zero taxes on our insurance, on our cash accumulation within the insurance policy if it's structured properly. Now, like I said, we don't know what the future tax rate's going to be, but statistics from David McKnight, the author of The Power of Zero, he's saying according to the Congressional Budget Office, if Social Security, Medicare, or Medicaid go unchanged, the rate of the lowest tax bracket would increase from 10% to 25%. That 25% tax bracket will rise to 63%. And your 34% tax bracket could go as high as 88%. That's why the power of a zero tax bracket is so important. We do not know what the future tax rate will be. Now, here's a chart of the S&P 500, the top 500 Fortune companies. We have a red line and a blue line here. Red line is your IUL beating the red line is your 401k. The blue line is your IUL. The IUL beats the 401k every time, and I am going to show you why. Now, these left two rows right here, this is your qualified plan, your 401k or IRA. Your right two bars here is our IUL client. This is the actual statistics from the S&P 500 from 1997 all the way to 2014. Now, both of these clients in 97 put $100,000 into this account. The first 2 years on the qualified plan investment had 26% gains, 19% gains, and this client made $51,000. The next 3 years was the dot-com bust and 9/11. So the market lost 10%, 13%, 23%. This client is 6 years into his investment. He has $10,000 left, $10,000 less than his first initial investment. Now, the next 6 years, he does some decent gains, 26, 8.99, 3%, 13%, another 3%. He made $45,000 on top of that $101,000 of an initial investment. The dreaded 2008, the mortgage crisis. The stock market dropped 38.49%. Damaging this client's portfolio. He has once again another $10,000 left from his first initial investment in 1997. There's a major issue here, not just being that he lost that much money, but this client wanted to retire that year. And now he has less money than his first initial investment. So it's forcing this client to work about 6 more years. 6 more years down the line, he has $204,000. Now, the client cashes out this money. He's subject to federal and state income taxes. So let's say they were only 25%. He's only 50 years old. So there's an early withdrawal fee. It's called the 59.5 fee. If you withdraw money before 59.5, you're penalized 10% on your qualified plan. and then there's about 4%, 6%, give or take, in other fees. So when this client finally gets his money after taxes and fees, his total would be only $124,000. So he funded this policy from 97 to 2014 to only make $24,000. Now let's talk about our IUL client. Our IUL client is capped at 14% with Fidelity and Guarantee Life. Every insurance carrier is a little different, so please follow up with your insurance agent about the caps and regulations within the insurance policy. So the first 2 years here, our client didn't do 26%, didn't do 19% because we're safe investing. They maxed out their policy at 14% and made $129,000. The next 3 years of loss, our client didn't lose any money whatsoever because of our 0% downside protection. Now, after this loss, I want to show you the power of compound interest. We're compounding 14% on $129,000, and our client made $48,000 this year. Now, this client got a compound interest on 26% of $90,000, and this client only made $114,000. The power of compound interest is huge. So we're compounding on a larger number over here because we didn't take loss, but we have a smaller percentage on the compound interest in. They have a higher percentage and they're making less money than us because they're getting that compound interest on 90,000, not 129,000. 2008 came around for this client and he didn't lose money. When this client finally retires in 2014, their cash value within the policy has $362,000 in it. Now, if you structure the policy right, they could not be subject to federal state income taxes. The early withdrawal fee does not apply. You just have to keep 10% of fees towards that life insurance policy to keep the death benefit active, to keep the cash value constantly flowing and gaining interest. This 10% isn't really a fee. When you pass away, this 10% will be released and given to your beneficiaries. The rest of the death benefit will be given to your beneficiaries, and whatever cash value that was left within the policy will be transferred to your beneficiaries, all tax-free. So, next slide. You guys are here to learn how to make money and build your First Look business. There's multiple ways to get paid with First Look. We have advanced pay commissions. We have bonuses and residual income. You can do split sales with other agents, and you receive a generational override when you get to a specific level of your business. Now, our average sale, let's say it's $100 a month. Now, your commissions vary on contracts. Our bottom end contract will be 40%, and our high end contract's 100%. So, a $100 policy on a monthly pay would be annualized to $12. Like I said, we get paid advance. So, the annual of $100 will be $1,200. Say your contract was at 70%. So your total commission would be $840. You're going to be advanced 75% of that. That's a 9-month advanced. So your advanced is $630. I don't know where you could sit down with a client for 1 hour, show them this presentation, show them how to properly invest their money into an insurance policy, and make $630. If you're on a hourly pay, $630 working part-time on minimum wage, that could be a 2-week paycheck. Now you're probably wondering where this $840, the spread between these two numbers, go into play. Well, like I said, that was a 9-month advanced. We need to be advanced 3 more months. So on the next 3 months, you're going to get paid the spread. So let's say $70 on month 10, month 11, and month 12. Now that's the whole first year advanced. After the first year, you'll be compensated anywhere from 1 to 3% of the monthly premium from year 2 to year 10. Now, say you did three $100 policies and you're getting 3% every month off of those policies. That's $9 a month. If you have 100 of those policies, that's $900 a month. That's where your residual income kicks into play. Now, I want you guys to ask yourself, how much do you want to get paid a month? Some people want $2,000, $5,000. We have those entrepreneurs out there trying to make that big money, $10,000, $20,000, $30,000 a month. I'm going to kind of show you a few illustrations on what you can make if you're writing one sale a week at a 75% commission contract. So one $100 sale a week at 75%, your total pay will be $900. Your advance pay will be $675. Your monthly advance will be $2,700. An annual pay basis, you'll make $43,000. What if you were doing two $100 sales a month? Or that could be four $50 sales a month, 8 $25 sales a month. Your annual pay will be $86,000, $1,350 a week, and $5,000 a month on your advancements. What if you're writing four $100 sales a month, $172,000 a year? You're making six figures only writing four $100 sales a month at a 75% commission contract. That's $2,700 a week and $10,000 a month. That's huge. Now, I said we get paid a generational override. So you have agents. You got to that point where you know how the business works, you know how the product works, and you want to pay it forward to others and teach them what you've learned. You enrolled 3 agents into your business. One is at 50%, one is at 65%, and the other's at 65%. There's a small spread between your 75% contract and their contract. So the 65s, you have a 10% spread, and the 50%, you have a 25% spread. Now, say you're out doing your own sales or enjoying your time with your family or on vacation and your agents are working. This 50% agent goes out, writes a $100 sale at their 50% contract. They're going to get paid based off of the 50% in their 9-month advanced, but you're going to get paid a 25% generational override. That total pay would be $300 and your advance would be $225. What if this guy's writing one sale a week? Your monthly pay is $1,200. Your annual pay override is $14,000. That's $14,000 a year off of one agent writing one sale a week. Now, with the 65% agents, they do the same thing. One $100 policy a week. Your total pay would be $120. Your advancement would be $950. All in advances with these 3 agents, you'd make $405 a week, $1,600 a month, and a total generational override on an annual basis of $25,000, almost $26,000. So you have 3 agents writing one sale a week, and you have yourself doing one sale of personal production a week. Your total annual income would be $69,000, almost $70,000 a year. It's really that simple. Now I want to talk to you about our commissions and promotion scales. So as you come into First Look, all you have to do is enroll in the pre-licensed training Enroll in First Looks program. We're going to instantly offer you a 40%. Once you pass that test and set up about 3 personal training sales and a financing plan with the agent that brought you in, we're going to give you 50%. Now you want to move up this promotional ladder. You have to write business. We have a little thing called BVP, that's business volume points. How BVP works, your personal business volume points is your target premium issued paid. So a $100 policy, your BVP would be $1,200, the annualized premium. With your downline, you get 30% production credit from each leg. So 100% on your personal production, 30% on each leg of your business production. So to be a 60% agent, you need to hit 25,000 points of BVP in a 3-month period and have one agent enrolled at an entry level. When you want to jump to the 75%, you have to hit 155,000 and close BVP in a 3-month period and have your agents enrolled. The 85%, 250,000 in BVP in a 3-month rolling period. Now, 90% is our max contract before we go into the franchise partnership. To get to that 90% contract, you have to do 500,000 in BVP points in a 3-month period, have your 10 general agents, your 5 intermediate agents, your 5 advanced agents. At this point, at 90% contract, you're making a high 6-figure income. In reality, at 75%, that's the contract where you could hit your first 6 figures. Now, this is the big one. We're offering a franchise partnership with First Look. To achieve that franchise partnership, you have to hit $1 million in BVP in a 6-month period. Now, you have to have agents structured properly to help you run this business. You need 15 general agents to help you do your entry-level sales, your college planning sales. You need 10 intermediate agents to help you with those personal financing sales on our older millennials or Gen Xers. Now we also need 5 advanced agents. These 5 advanced agents are skilled in rollovers and conversions on a lot of these qualified plans that are highly taxed, or baby boomers that need a rollover and a little tax-free income. And then we need 2 recruiting agents. We need agents constantly recruiting and building your agency. Then 3 managerial agents to help you completely manage your business. We'll give you that franchise partnership, 100% commission. Now, I want to thank you guys for tuning in today and learning a little bit about First Look's business opportunity. After watching this video, please follow up with the agent who sent you to watch this video, or you could get a hold of me. My personal email is mscarfo@firstlookins.com. Once again, thank you guys and have a wonderful day.